So, if you're looking to purchase a home, before we get into all of the details about different loan programs and etc., let's first talk a little bit about applying, what that's like, when you should, and etc. I know I talk to a lot of people who are very hesitant about applying for a mortgage, and I can completely understand that. So let's address some of the reasons that people are generally hesitant to apply. The most common one that I hear is that they don't want to get their credit pulled. Well, I can't speak for other lenders, particularly big box type lenders, but for us, pulling your credit is very expensive. It's over $100 each time we pull it. So we're not in a real big rush to pull your credit either. In fact, I'd much rather have a conversation with you about your credit and your credit challenges before we ever pull it in the first place. That way, we have an idea of what we may or may not be able to qualify you for. And if we think we can't get you approved right now, then we can start to tailor a plan for how we can get you there. I think the second reason that people are generally nervous about applying for a mortgage, and they don't say this a lot until we get into a conversation about it, and then I find out that they're just nervous about getting into all of their personal information with somebody. And certainly I can understand that. Um, for a lot of you, if you're applying and you're not sure if you're going to be approved for a mortgage, that can be pretty scary. So I've dealt with a lot of first-time homebuyers in my career, and a lot of them here in the Mid-Michigan area with credit issues. So there's a lot of things that make it difficult for you to get a mortgage, and putting yourself out there for that, it can be as nerve-wracking as going on a date or public speaking or something like that. I mean, it's people get very nervous about it, and I completely understand that. So, what I would say to you in that case is if you're hesitant because you're not sure, to try to do the best you can to get over that fear, because if you don't at some point take that step forward to figuring it out, you're going to keep going on not being sure whether you can get approved or not. But also, you're going to be using up the time that we could have told you, hey, listen, we can't get you approved now, but you need to do A, B, and C in order to get approved. Now, I talk to people all the time that had already applied with two, three, four mortgage companies, and nobody ever even called them back. So for you, you may just apply with the wrong mortgage lender, and then they may not call you back. Well, I'll tell you, I've been trying hard to spread this same message since 2005. Don't let that discourage you. If you talk to six lenders and they don't call you back, call the seventh. Now, I know that might be scary because you're thinking about, well, my credit's not getting pulled, and nobody's even, I'm just not going to be able to do it. People also are very hesitant because they just don't want to get their credit pulled a bunch of times. But really, if you're applying for a mortgage and you're applying all within the same 30 to 60-day window, then the credit bureaus actually just view that as shopping around for a mortgage. So you're fine. Even if it does affect your credit, it's going to be a very small impact. It's not going to ruin your credit. What that whole credit inquiries thing is about that people worry about is actually for applying for a lot of different types of credit within that same window. So if you were to go out and apply for a home loan, a car loan, a boat loan, a credit card, all within a short window, then the credit bureaus are going to say, wait a minute, this person is trying to get way over their head way fast. We got to shut it down. So once you take the step of actually applying, and most likely what you're going to do is just come here to my website or click a link to go to my online application. These days, it's generally the fastest and most secure way to transmit your information to me. So that's generally what I recommend. If you happen to be old school, we can, of course, take all of your information via telephone or even by a sit down appointment. Those are generally harder to come by, though, because we have to schedule a lot of time for you to come into the office, etc. So most likely you're going to end up filling out my online application. It'll take you about 10 to 15 minutes. All of your information is encrypted and secure. And then as soon as you're done, it transmits the information directly to me. Then I can start working on your application. So the first thing we do, we import it into our loan system and we start reading through your basics. This is where it's important to be very accurate about your income and your employment history. In general, every time you apply for a mortgage, you're going to need somewhere around 1 to 2 years of employment history at a minimum. So that doesn't mean that if you've only been on your current job for 30 days that you can't get a mortgage. It just means that for most people, you're going to need some type of a history that amounts to at least 1 year, not necessarily in the same industry, but just 1 year of total employment. The second thing I'm going to look for is your income. And I'm going to look for whether or not it's stable, if it continues every single month, or if it's more on an hourly schedule where some weeks you work 35 hours and some weeks you work 40 hours, some weeks you work 45 hours, etc. So with the overtime, I can only use it as long as it's consistent. So I've got to show a history of that and project it forward. Also, if your hours vary greatly from week to week, that still doesn't mean that you can't get a mortgage. It's fine, but I have to make sure that I establish a rhythm to it. So I have to be able to predict where your hours are and where they're going, and I can only give you credit for whatever your average is out of that amount of time. I'm also going to look at things like whether or not any of your income is bonus. So whether or not that's going to continue year over year, or maybe it's salary, so it's very stable and we know we can use it with very little documentation, or if it comes from a fixed income source like Social Security like Social Security income or a pension or an annuity from a retirement account. All of those things are completely acceptable forms of income for a mortgage application. It's just that all of them come with different documentation requirements. Now, out of that income conversation, next we'll start to look at what is your debt to income ratio. This is one of the most important factors in qualifying you for a mortgage. It varies for the different loan programs you're looking for. For instance, just as a roundabout, with conventional loans, you generally can't go much above 50%, and in most cases, 45% of whatever your gross monthly income is. So we would take your gross monthly income, multiply that by 45%. All of your debts, including the new mortgage that you're applying for, need to fit under that 45%. If you need to expand that 45%, that's where loan programs like FHA come into play. FHA will generally allow you to go up to 55%. And it may not seem like much, but that 10% actually makes a huge difference. So sometimes you may end up having really good credit, like a 720 or a 780 credit score, but still needing FHA. Well, in those cases, what that is, well, you probably have an extended debt to income ratio, which is a lot of Americans right now. So that's not all that abnormal for somebody to have very solid credit but still be leaning on the FHA program. Now, the next bucket that we're going to go into is looking at your assets. What are your assets? How much is liquid? How much is retirement savings? How much you have access to in a worst case scenario? So, in a worst case, if you can't get approved for a zero down option, like a rural development loan or a down payment assistance loan with FHA, or a VA loan if you're eligible. If you can't use one of those and you have to have a down payment in order to get approved, a retirement account might give you the opportunity to borrow from that temporarily while you secure your asset. Your assets will be one of the most important things that we use in figuring out what loan program is going to work best for you. Not only how much do you have access to, but how much are you comfortable parting with? Because it's not just about what you can make work, but what can you make work for you? Now, generally, the last thing that we start to look at is what kind of home you're looking to buy so that we have an idea of what your goals are, because it's not just about um, what you can get qualified for, but what do you want and how do we make those two things meet? In most cases, you are much better off finding a home that you want to live in and knowing that you're going to be there for at least, 10 years or so to make sure that you get your money back out of it before you upgrade. And ultimately, you also know that if you are buying a home with a long-term investment in mind, that you will win. So trying to figure out how to buy a house, fix it up, flip it, and sell it to make money, that that can work, but it's always a gamble. Whereas buying a home that you love and loving it while you live there and then waiting for the market to be right to upgrade, that's a completely different game plan. And ultimately, that's a game plan that will always win. Because if you're comfortable being there on a long enough timeline to where you know you can get in the market whenever, because there's never a bad time to get in the market, but get out of the market at the right time in order to get what you want when you want to upgrade, that's a completely different conversation, a completely different set of goals. And that long term goal always pays off. Only the timeline changes, never your ability to win with your real estate investment. If you're hesitant or worried about getting denied for your loan or not hearing back, my advice to you would be to go ahead and make the leap. Even if we can't get you approved for a mortgage right now, let's at least start getting you taking the steps needed towards getting approved. And in most cases, that's actually far simpler than you think. Chances are we just need to tweak a little bit of things on your credit here and there. Maybe you'll have to wait a little bit to save up a little bit of money or whatever it is that we need to get sorted out for you. You'll never really know unless you talk to somebody like a local lender, somebody like me that will take the time to actually go through it with you.